QE has been a major success as we see the stock markets rising around the world. Now, it does this in such a way that it's devaluing the currency that the stock market is measured in. So this is a little bit tricky. But today we're going to discuss how China's stock market has gone ballistic. You came here for the truth, so let me unveil that for you. I want to get into China's stock market. I have a few other dots that I want to connect as well. Let's begin with this article talking about Greece, and essentially I've been covering this obviously since it's all gone down, and the Financial Times is now talking about something that I have been bringing up consistently every single time I mention Greece. Athens, they believe, is intentionally prolonging the negotiations to the last minute in a belief that creditors will eventually blink and agree to grant wholesale debt relief and new bailout cash with few strings attached. This is exactly what they're waiting for. This is what the whole world is waiting for. This is what the financial analysts are certainly waiting for. They don't want a bankruptcy. They don't want a default. They don't want them to leave the Eurozone. They don't want them to go back on the drachma. They want everything to be just continuing the way it is. They want this current trading day to be okay. They don't want chaos. They want it to be heading in one direction, and that is up. They do not want any volatility more so than they can predict. If they know that today the stock market's going to rise, it makes for a very easy trading day. There's much more information in this article, and the next one, I want to move on to that right here. I think the market's trying to figure it out if Friday's employment report is going to move the Federal Reserve to act in September. What everyone's waiting for, what everyone's hoping for and relying on is the Federal Reserve's words. They all believe that the Federal Reserve is going to or could raise rates in September. If they do raise interest rates, this is obviously going to cause a domino effect that will crash the economy. But will it do so if they raise it, let's say, 0.25%? I don't necessarily think so, but that sets the precedent for future increases, which undoubtedly cannot be sustained. Now, the market is not going to be able to deal with this if it does rise. So this is what they're concerned about. There is a situation with employment, the real situation, that is really showing you that absolutely they cannot raise the interest rates. Now, if you look deeper into it, you'll find out that these easy money policies and everything that they've been doing is the reason that there is so much unemployment. But of course, they'll never get to that. Let's look at Marc Faber and what he said. He has been correct on many of his predictions, including the exact day that the S&P hit 666 a few years ago. He predicted that the market would rise from that point on. Pretty accurate prediction. But anyway, the reason that I enjoy Marc Faber is that his analysis of the macro or the whole geopolitical spectrum, it's very accurate. When I look at the whole financial sector, I feel like I'm on the Titanic. We're fighting about deck chairs, which assets are performing best, and we're fighting over the best tables in the ballroom. But I think it's best to find your safety boat and ladder, because I think the financial sector will implode one day. This is why he advises an extremely wide, diversified portfolio. He's talking about 25% in each of the asset classes simply because he said, we don't know what's going to happen right here. This is one individual who is obviously very knowledgeable, very well read, and he is basically saying, look, we don't know what the heck is going to happen. Put everything divided evenly, because this is just too risky at this time. Now, in my book, I actually quoted Marc Faber. And he basically had these comments by stating, never has there been such a rapid increase of new financial instruments as during the 80s and 90s. These fancy new instruments bring upon the boom, but also result in the collapse. What we see here is that during the 80s and 90s, they had this real increase in these so-called they call them investments or instruments, but I simply call them garbage. Regardless, they created these new things. They're legal somehow, and they gamble away with our money, using our pensions, using the stock market, and then when everything screws up, they are able to get bailouts from us, the taxpayers. So since the 80s and 90s, everything has escalated dramatically. We have seen what happened with the subprime mortgages, asset-backed securities, CDOs, CDSs, and all of the rest of the alphabet soup of trash that I have discussed before. So this is very, very important to note. Let's go on to this here, because we're talking about China. It's enough money to buy Apple Inc. 8 times over, or circle the earth 250 times with $100 bills. We're talking about $6.5 trillion. That's the sum of the value created in just 12 months of trading on the Chinese stock exchange. Imagine that, $6.5 trillion for a country like China, which is certainly growing. But that is a massive number, something that is completely unsustainable at this moment. As China's boom surpasses the headiest days of the US internet bubble, signs of excess are cropping up everywhere. This article is out of Bloomberg, gets into all the details. I'll just note a couple more in here, but understand that this market can't be sustained. You cannot just push up the markets doing different things where you loosen on these lending practices. This isn't a good idea for the future. Mainland speculators have borrowed a record $348 billion to bet on further gains. Novice investors are piling into shares at an unprecedented pace, and the price-to-earnings ratios have climbed to the highest level in 5 years. So, when we have a weak economy, as it says right here, a very weak economy, you have the stock market being pumped up like crazy. This is an exact mirror of what is happening in most countries around the world. China does not excuse themselves from what is happening. This is very serious information, but I want to move on to this article here. Gazprom Neft sells oil to China in renminbi rather than dollars. This is continuing. This is a currency war that is taking place. We can see that many companies, many countries, they're doing negotiations with China, and they're doing away with the US dollar. China wants to change everything that's happening in the world. They want to be part of the next world reserve currency, whether that's using their own currency, which I don't believe it's near ready yet, or whether it's part of a basket of currencies. They want to take charge. China is certainly leading the way, and they are really partnering up with countries like Russia. Look at this. Speaking of China, we have West Vancouver home sparks bidding war, sells for $1.1 million above the asking price. You're looking at homes that are absolutely astronomical, particularly in Vancouver as well as Toronto. And this article talks about the Chinese investors who are coming over and trying to diversify into other things. They use U.S. real estate. They also use the real estate within Canada as well, particularly in Vancouver. We see the home prices that are absurd, to say the least, to be polite, that they are absolutely absurd. This is just doesn't make sense at all. But here we are looking at these prices of the Vancouver Sun. You can read more if you're interested in that. I'm going to move on to the final article out of Bloomberg. Abenomics, aimed at the virtuous cycle in the economy, is entering a new stage. More than anything, the key to raising productivity is investment. That's the Prime Minister right there saying that in Japan, all we need is more investment. So what do? Well, they try to get people to buy up their debt. They try to get people to buy into their companies and to their projects. But what happens when you set up all of this infrastructure or anything that you need money for and people don't buy? Well, you do what they're doing with Abenomics, and that is print up the money and give it wherever it's needed. Remember that Japan did say that they will buy every single share. They will buy every piece of debt. They will buy anything that it takes in order to keep this system going. They will never, absolutely never admit defeat. This is what's happening in China right now with the stock market booming while the economy is dying. You have this in the US, the exact same thing. You have what's happening in Europe being a complete disaster where they simply will not give it up, let it collapse, let everything be restored to its natural level. That's not going to happen. We all know that, but that is exactly what should happen. If you found this video informative, please give me a thumbs up. I truly appreciate that very much. I've been trying to get back to your comments, trying to get back to your emails. If you want to email me, it's david@themoneygps.com. You can always get me on there. I usually reply within a week, but I have gotten back to every single person in my email. So if you have emailed me and somehow I haven't replied back within, I believe, let's say 24 hours ago, please send the email again. It must have got caught in the junk mail. And looking forward to future videos on here. Looking forward to so much information that I need to get to, and it is just not enough time. If you found this video informative, I know that you will find my book, The Money GPS, even more informative. And you can actually flip through the book. If you go over to Amazon, they have a look inside feature, and you can actually flip through the book for yourself and see if you like it. Take care.